Are we waiting for? Refresh. I'm just killing some time before the crowd shows up. So in Michigan consumer sentiment, that's a phone call survey, right? We wait and see what the survey says. Home sales month over month should be important. This might be important, but that's out of reach for us. We'll see what happens. Da, 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 da. We go and look at yesterday's price action and we look at today's price action, combine that information with the news that we're about to receive. As long as the euro stays below the high, which is 910, we're bearish. We'll find out here in a second, in actually a few minutes, what's about to happen, right? So this level here, as long as we're below this line, we have to sell. And as long as we're above this line, there's a idea that maybe we can bounce here. We'll see how we get to here. I'm really thinking we should be going much lower, right? So we'll have to wait and see after the news comes out. All right, let's give the news a chance to show its cards. Just setting this up. I took a few shorts from the top when I first came to the computer earlier. We have a couple of minutes left, minute and a half. All right, so looking at this, we clearly have a lower high and a higher low, right? Inside bar, inside of a bearish doji. There's a good intent to see this go down, right? There's a good probability that it goes down. We have to wait and see what the
1 minute before the release, stand by.
We have to wait and see what the release will say. Once the news comes out, it propels the euro one way or the other. And we show up and trade the reaction. All right, so we're either selling from the top, or we may end up buying at the bottom for a small bounce before selling it again. All right, so we'll see. This is a downtrend. All right, so we don't really want to be buying anything. We're looking for an excuse to be sellers.
10 seconds before the release, stand by.
Let's go to 5 minutes. Let's see what happens here. There goes the number. Testing the high. Let's just wait this out a couple of seconds. Right. We don't want to get caught in this, right? So we want to wait and see how it behaves up here. Like so. See how it goes through. Right, these are swing trades, no target, and they have a 36 pip stop. And so as I'm just starting my trading session now, after the news event, I'm at resistance. I'm going to sell resistance for 3 pips, 3 pips, 3 pips. Right, so I'm a seller of resistance because I don't want to fight the overwhelming tide. Right, we know the euro is bearish. This recent news event just gave us an excuse to be bearish. Okay, so we want to play with that excuse in mind. The options expiry was scheduled for 850, $1 billion, right? And that obviously we went the opposite direction, right? So instead of propelling the market into the 850 options expiry, we actually closed out of the money in the opposite direction. Right, so the options expiry is done, finished. So now we're already looking forward to the next event. And we know that to be a pullback. So now we want to build a position to take advantage of that pullback. We're just trying to layer in. Another way to look at this, if you want to, if you zoom out a little bit or give yourself, a little bit more time on your chart, something like this, we can see something like that. We can see this, right? And we kind of have a pretty good idea what we're up against. And if we break this right here, which happens to be 890, right around here, we are probably going higher, right? If we break the bottom of this down in this area, we're probably going lower, right? It's just a probabilities game, and we're trying to assess the probability in real time, right? The news event is done. It's finished. It's over, right? So the market is already thinking about the next move. We have to anticipate the end of the current move and play for that next move. Right, so we're anticipating the end of the current move somewhere in this zone, and we're selling in this zone, anticipating the next move. Right, so it's this idea that we don't know the future, but we can measure the present. We can measure what's been happening and understand if it's average or more or less. All right, so if I can just give it a couple of minutes here, we'll be able to add a couple of trades. Right. If it pushes up into this zone right around here, I'll sell. I'll take a couple more clicks. And just so you know, I have 18 open trades right now. 16 of the 18 are swing trades up at the top. The other 2 are the ones with a 3-pip target right here in front of me. And then at the end of this session, I want to review what we've done for the week. we started the week, I think we had 4,000 pips in the account. Let's go see that right now. Yeah, right here. Right here. So total pips, we're up to 5,468. So we've made $800. We've had 155 losses since December 14th, and we've also had 1,500 wins. I think we're killing it. Right? The account started here and it's ending up there. Right? We're moving in the right direction. We're doing everything right. We do, we do realize profits along the way, but it's engineered. It's in our control, right? We're not relying on luck. Right? If it comes back up to here, I want to spend the money that I have access to. Right around here. Oh, right there. So, 2. There, I saw a green candle there. Boom, boom. We'll take one more. And I'll be left with 1 click. So if it pushes up higher, I'll take that 4th click that I have. I think we're doing okay. The account is up $800 in a month. Beautiful. A handful more winners. Good way to end the week. We'll keep that running. All right. So a retracement on this current candle. Right. As we speak right here. Boom. 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 Right. So I'm spending the money that actually belongs in this box. If it drops to the bottom, to the lower box, I'll be spending the money that belongs in it. Right down here. I'm just trying to recycle this upper box. Oh yeah, we are rocking it. Awesome. All right, so going back to the daily for those that came in late, when we compare today with yesterday, we clearly have a lower high. We also have a higher low. So that puts us inside of yesterday. Yesterday was a bearish doji. So we have to assume bearishness for today. It's just an assumption. So we have to go and, see the actual facts. And so by looking into today on an hourly scale, we can see why it's so small, so shy of its average. And we can also see how it came to be, right? So by that, I mean, we put the high in before we put the low, right? So now we're clearly trying to push towards the low. And we have to take that into consideration when we have this ladder in front of us, which so happens to be the same as yesterday, right? So yesterday we traded here, we started to buy down here, and we finished our day buyers. Late afternoon before my bedtime, I told everyone in the chat room to be selling resistance. So that would be up at the top here. And this morning, we want to be continuing to sell resistance because we think it will break the bottom of this triangle and will probably end up near the lows. Right. So the assumption is the overall trend is still in play. And we're not going to fight that. We don't want to be buyers in an environment like this. You want to exercise patience and sell the tops instead. Right. You don't want to chase it up because for all we know, it might only go one wrong and then just continue to fall. It may not go up the 2 or 3 boxes that we expect. right? So it's really the overwhelming trend is what lifts all boats, and trying to fight that has to have an a fact. You have to have a reason to go without, you know, counter trend. Right here, take a sell if you can afford it. Right, and now wait. If we can get into this lower box, we'll be playing the lower box, right? Selling the lower box. Today, it's all about selling in time. So somewhere around near bankers close, you know, when the banks close in Europe, we may be thinking about buying down here. And by then, we may be building the wick at the bottom of the daily candle. Right. And so having built the body of the candle on the way down, it may call for a wick at the bottom. We'll see when we get there. Right. But for now, we have to go down the ladder as we see fit. And that so happens to be the same ladder that we drew yesterday. Since the market's been ranging, we're just extending the lines from left to right. And we've just closed a few more trades, a whole bunch more trades. If it pushes back up, I want to sell more. Our swing trades are up $35. And the swing trades that are here, they're up about $40 now. I'll sell right here, right there, right there, right there. No hesitation. Just do the deed. Right, so we waited for the news. The news came out. The direction was limited in scope. We knew it wasn't going to go to the moon. It went to resistance. We started selling resistance. Now we're trying to go and find support. And by the time we find support, we should have completed an average daily range from top to bottom. And hopefully we'll be bouncing off the bottom and creating a wick. Sorry, I have hiccups. Creating a wick at the bottom of the daily candle, right? But first we have to get to the bottom. A million factors can impact this thesis. And so this is why we trade the facts over here. So we closed one. I'll reopen that right there. Boom. $17 and we've had about 17 winners. No complaints. If the market decides to keep going up, we'll find out pretty soon, right? We'll be up here. And in this box, we'll be making higher highs. The entire structure begins to change up here, right? We'll know whether we want to fight or not fight and book losses, right? Booking losses is part of the game. It may be called for. We've booked 155 of them so far. It doesn't seem like it, but it's the fact that we click multiple times each time. Right? And they're not all 36 pip losses either. The majority of that 155 is fabricated, right? It's by targeting breaking even when we target break even, half our trades are losers, half our trades are winners. Hence break even. And so we engineer break even purposefully and therefore purposefully book losses. And again, much like last Friday, I really don't want to be short USD, US dollars, going into a weekend. It's just geopolitical stuff. If this is a low, for example, if this is a low, where's the price possibly trying to go to? Up here? Right? I'll be able, willing, and capable of selling there. I have the money to do it. I have the gumption to do it. I have the willingness to do it. It's just planning ahead. Right? Plan A is trying to sell right here, right now to make money. Plan B is to build that position that is selling, right? Ideally, I'm targeting some kind of a break-even move. Right? We're in this upper box there. We're in this upper box. So I'll take a couple of clicks that belong there. Opportunistic. Let's see. If I draw, where are they? Yeah, right here. If I draw a down arrow, I'm pretty sure it helps it go down. Like I'll put an arrow right there. Yeah, there you go. And then I can transfer my thoughts to that arrow and force it to go down. Just kidding, buddy. Just kidding. If only it was that easy. Just tell it where to go. Some people try, some people will put all their money to work trying to force it to go one way. And it's a futile endeavor, right? It's the quickest way to go broke. And so we learn to limit what we do, limit the number of clicks, limit the number of boxes, limit your max loss, limit your target. Right? That sounds stupid, but we do it. We limit the target, and that builds consistency. And from there, it's just repetition, right? It boils down to you and your execution. There you go. If you have a click to spend, spend it. We're selling when it's expensive, specifically in a downtrend. And inside of this triangle, we are, or I am, looking forward to a breakdown. Right? If we can go and test 845 right here, and 845 fails to hold, then 810 is the next likely target, right? 4 boxes away. Right? 45 comes from the day before, right here. Right? So if we are going to break down, assume, it's just an assumption. All right, we're coming down to around 810. Right, sell if you can. Now I'm done. I have to wait. All right, let's just wait this out. If we break to the top, box number 2, or I mean, box number 3 from where I am, I probably will start booking losses up here. All right, I don't want to end the week in drawdown. I'd rather end the week flat, even if it costs me some of my earlier profits. I want to rest easy on the weekend and not be worried about Monday's open or Sunday night's open. Right? Conditionally, I'm creating the outcome here, right? I choose where that break even is. I choose where to close everything. And as far as I'm concerned, I'm in the green, so I'm not closing anything. I'm not having to be worried about my positioning. So we've just closed a couple of trades that were in the top box. If we go back up in the top box, we can reopen these 2 trades. Patience, patience, patience. I have so much of it. Just kidding. It's managed. It's like selective listening. I have selective patience. Let's see if we can just repeat this. If I can close a couple of trades that are in this current box, I'll be able to recycle them as well. Ooh, that was close. Just like that. Oh, one more. I'll take it. I'm pretending it's in the top box. I just took 2 there. I should have taken a third. Right there. 3, 4. There's the 4 clicks that belong in this upper box. Almost 8:30 my time. Almost 8:30 in the mountains. That's when I would expect the pullback, or the retracement that I've been building into. Right, I've been selling every time it pushes up, and at this time of day, this work tends to start paying off. Delayed gratification. I could also be totally wrong. We wake up on the moon. Check the ladder. We're running out of room. We're gonna have to make a decision soon. I have plan A, plan B. Ideally, plan B won't have to be executed, but if must, we know what to do. And then finally, plan C, if everything works well, doesn't even come to the forefront. You know, it's one step that has to prove the next step. You can't jump ahead. You can't put yourself in front of your skis. Right? Wait to see the proof before you proof being, you know, the level and the reason for the trade. Right? You don't need confirmation. You just need to be testing the level you wanted to test. Right here, right now. If you can afford it, take it. Right? Even if it pushes up, we know where we're definitely wrong. How far away is that? 3 boxes. Right? So above this right here, where box number 4 would be, everything below that red line is a sell. And so we have the ability, the willingness, the space, the money. We have a lot of on our side, right? We have a lot of opportunity on our side to do the right thing. Let's just read this out. It's time now that will dictate, you know, the outcome. We've built the position, we've laid the risk that we can afford, where we can afford it, and now we're just waiting to be defined as winners or fixers. We have to fix this. Right? The waiting is tough because this is where your brain wanders, you know, and you start second guessing what you just did a few minutes ago. And odds are in the beginning you're gonna shake loose. You're gonna give up on a good plan. And sometimes the plan is not faulty, but the timing is off. Right. So you have to give it the time as long as it's not breaching any of the parameters that you've defined. Right. This right here, when we look at the box, when we look at time through the box, oops, I'm trying to move this. So when I'm looking at this swing here, it starts in this box right here. I would expect the price to remain in this box until right there, right? And already we broke out of the box very, very rapidly, like 1, 2, 3, 4, 5, 6, 7, 8 candles, and we already broke out of the box. 1, 2, 3, 4 candles later, we're back in. Right, so that move is bigger than average. Right? What's this move here? From this low to that high. From this low to that high, it's an average move in and of itself. Right? So as we speak, we are in an average move, average swing, average standard deviation, sigma. Right? It would be expected that we remain in this sigma until over here, the end of the box, literally the end of the box. Right? And by then we would expect to be going into this box or this one. Right? But for the time being, expectations are we are here. Boom. Until further notice. Right? And the notice is coming up. We will be told what to do. Or we will see it. It's either going up into here, or it's going down into here. For the time being, it's going sideways, and we can't tell it what to do, right? We have to be told what it's doing. That's where this comes in, right? You ask yourself these questions at every level you come up to, right? By the time we get to the bottom of the box here, we should be near this blue line right here, this purple line. And we'll be asking ourselves, are we bouncing off of this, or are we breaking through this? It's the same question you're asking yourself over here, right? Are you bouncing off the box, or are you breaking into the next box? If you're breaking the bottom here, you're going one more rung on your ladder. On this side, the lines are static, right? The lines do not move. You're just watching the price move. Whereas on the left side, you're moving your standard deviation to capture the price, right? You want to measure what's happening. Right? By measuring what's happening, you're also measuring your money, dispensing your money appropriately, not willy-nilly, not random. So that's the kind of stuff we want to be in tune. Like we're keeping our finger on the pulse of the market through multiple time frames. They're all telling us a similar story, right? But the timing of the events on each time frame is what you're trading, right? The timing on each time frame, the cycles on each time frame are different. You're trading a range within a range within a range. You're trying to align a couple of these time frames in the same direction. If the daily tells me to go short, the hourly tells me to go short, I'm not going to go long. And let's see, can we recycle some of these trades? Right there, maybe. And maybe one more if it pushes up again. 20 seconds or so. Like that. So we're trying to slow down from, this runaway brain. Anything that is too good to be true, your brain's already spending the money, right? You've already bought the Ferrari before you made your first dollar. And likewise, when things, are showing red or printing red in your brain, the bank is already, repossessing the house. And so you have to find this middle ground where you can think clearly within the extremes. And you create those extremes, right? You define those. If 36 pips is too much risk for you, like too much money, back it off. And by the same token, if 3 pips doesn't make any sense to you, like, why am I doing this? Maybe this is not for you. All right. So it's a balance. I'm trying to create consistency in my equity curve, and 3 pips delivers that consistency. It's think of myself as, selling buttons or matchsticks or shoelaces. I'm trying to make them all identical. All right, so here we are protecting money in the box. Boom. That was microsecond late there. If it pushes up again, I'll do it again. If it can push up, I'd be happy to take a trade up there. Come on, teasing me. Up, 840. We're past the bottom of the hour. So the stock exchange has been open for 1 hour. And that's usually a good time to experience a little bit of a pullback. Beautiful. That's what we want. Right. More of the same. If it pushes back up, I'll sell more. Right. My swing trades are in the money. I do have expectations for those swing trades, to end lower than where we are now. Right. And so I took the swing trades. Be nice to if I could close 3 boxes into profit on those. All right, that would take me somewhere near here, 850. If I can close my swing trades near the low, I'll take that with a big smile. And yet, if I'm wrong, I can fight my way out of the swing trades, or I can just book losses immediately. Okay. I'll have to look at time and see what kind of trouble I'm in, if I'm in trouble. There is that Fed speaker on the calendar. I think it's in 2 hours from now, or 1.5 hours. So between now and then, we have some time. Practice the art of winning. Right? Anything can happen, but the probabilities are what we weigh, and we put the money where we think the probability lies, right? So it is a teeter-totter, it is a seesaw, it's shifting, and it's always moving. It's a fluid target, and this ability for you and I to keep track, it is it's a cycle within a cycle within a cycle. And so you see yourself on multiple time frames at the same time, trying to head in one particular direction. In the end, it's a pullback within a pullback, or a range within a range. The actual candlestick patterns and shapes, and the names that we assign all this stuff, I really don't keep track of anymore. No, I can't be bothered. I have my favorites, I have the ones that I'm quite familiar with, and then whatever else is, popping up in front of me, I deal with according to what I know. You know, I'm I'm progressively always getting better at this. Right there, it's like creating this menu of probabilities that I've experienced. The more I experience one thing, the better I become at it. Right. So there's certain patterns that I've yet to experience or witness or deal with or trade. And there's others that I seek out, like 3-bar reversals. Right. So yeah, it's situational. 8:45 or so. Do we have here? Right? We have a flat top. We have a rising bottom. This has the ability to break up. We have to deal with the facts as the facts are presented to us. So here we are in that upper box again. 1, 2. I'm looking left and I'm seeing all of this stuff over here. This area here. I want to sell that area. So I've already put 2 trades there. I want to save the other 2 in case we go slightly higher and maybe test previous levels like this one here or this. Right, this triangle gave us a clue. Right? It doesn't tell you the destination. Right? There's a click if you can afford it. I'll save the last one for a little bit higher. Something like so. Right? All this zone of wicks, all of this wick stuff here is what I sold into over here. See if that was the right thing to do. So if we measure from the latest low, right here, we've moved 1.5 box or so. Right, we're still expecting this. Right, it's just been postponed. Right, as long as we don't break the ceiling, we know what to do, we know how to do it, we know how to behave, we know why we're behaving this way, right? Because ultimately it is making lower highs, lower lows, it is trending down, right? It's a down market. And so we have to assume we will test the lows sooner than later. That's what we're doing here, right? We're testing this assumption. We're building a position in order to postpone our gratification and get paid on the next move, right? This right here is giving you a sale price. I have one last click to spend. I'll click it right there. Boom. And so now break even is 4 pips away, 5 pips away, 4.5. I may test the high. It may go the other way. Right? And if that's the case, we know what to do here. We know how to do it. We know how much to do it with. Right? And all that good stuff. If you look far enough to your left, you find levels that the market will probably be interested in. Right? And then you yourself can exploit those same levels with the intent to see this pay off. Right? This is what we're building for. May be totally wrong, right? We'll see. So let's just exercise a little bit of patience. Let's see if we can figure out which box we end up with in the next 10 minutes. And, that will highlight or rectify the anxiety that some of you might be experiencing right now. Right? The stress is when things are red and getting redder, right? But we have a plan to take advantage of that, right? This is why we sell it when it's going up. We're not willingly doing this until the end of time. We're doing this until we run out of risk capital, which is already allocated to this job. So we're just doing a job. And when the job works, it feels good, do good work. I like to hear good job, good job, good job, good job, good job 100 times a day or so. And, and then go to the beach. And so I think we picked the right side, the right time, the right purpose. And it's told us in 2 minutes which box it is. And I was thinking 10 minutes. And so, yeah, anything can happen at any time. Right? Create more than plan A. Right, so here I am willfully selling a little bit more. 2. If it pushes up, there's 3. Perfect. Second box. Right in here. In that upper box there. Like we just said, right? Anything can happen at any time. Within 2 minutes, you went from super excited to, oh my God, now to excitement again. Deep breath, deep breath. The volatility is picking up, which is uncalled for. Why? Let's see. 11 o'clock is the next main event. We're good to go for a while. We're approaching the UK fix. So we'll see how this resolves in about 8 minutes or so. I'm thinking it will resolve to the downside. I might be totally wrong. Let's remove this. This. All right, so we've had a whole bunch of winners. All of them were shorts. We've set up a short position, and now we're waiting to get paid on that short position. All right, so we're giving it the time that it needs to deliver the result that we're looking for. All right, so the plan is in play. It's a matter of time for us to see what we're expecting. Right, it may go there, but the probability tells us it's coming here. All right, so probability is what we trade, and this uncertainty piece up at the top there is what we learn to manage. So in that area at the top up here, in this space where we're learning to manage, it's where we build the position to ultimately get paid. Right? It's just this overwhelming bias. You don't want to fight this kind of stuff. Right? There's a time and a place to be counter trend, and it's not all the time at any place. So there's a clear sign of uncertainty. A lot of ambiguity right here in these last 15 minutes or so. Oh, this is a why not? Yeah, in these last 3 hours. Let's take a peek at the 5-minute chart. See how it's behaving through our ladder. Right? We're recycling the wrongs from yesterday. And we're just going up and down the same wrongs, right? All this indecision over the last 48 hours, the euro has gone nowhere. We're exactly at the same price we were 2 days ago, 3 days ago. And people trying to catch a trend wonder why they're losing their shirt. When the trend is interrupted, you and I kind of profit from those interruptions. Right? We structure a trade in that interruption. We take advantage of the situation. Consider yourself an opportunist. And let's see what happens up here. So 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes. We've spent 9 minutes going nowhere. If we adjust the box, we have spent 9 minutes moving 9 pips, going nowhere. Right, so now that we're in this new box, what do we expect the price will be trying to do here? I think it's going to try and stay in this box until it tells us otherwise. Right, so we don't want to change anything. We just want to adapt. We just want to try to keep up. Right, and the box gives you this measuring device so yet you can keep up and anticipate what's likely. We don't know anything for sure at all, ever. And that's clear. You know, that this is clear. Look how we've made our money today, right? We've been shorting in the middle of a range, near the high, near the top, right? On a how big is our daily candle? We've been making money in a 3-box day, 27 pip move, right? The whole day, 24 hours has been contained to 28 pips. And here we are trying to figure out where's that difference going to come in. Maybe we split the difference, right? Maybe we do 15 pips at the top and 15 pips at the bottom. Right? Maybe we do it all at one end. Maybe it's the wrong end. Okay? Maybe we end up here. We'll see. Right? Up there is not the wrong end. It's just giving us more selling opportunities. Right? We don't want to fight this. Right? So we want to be sellers in this environment. We just don't know where the sale ends. Like we don't know how high it's going. Right? So we have to allocate the money up front and then we know when to stop. Right? We do that by scaling in, scaling out, by measuring things, by devising a plan ahead of time. And then typically you have more than one plan. And so you're not hoping that it just keeps on working. You know, you're actually willing to adjust. You're willing to adapt. You have this extra plan B that you're willing to execute. Right? So if you only have one plan and you put all your eggs in that one basket, you're going to be upset more often than not. What we create is multiple alternatives, and we don't get upset that often because we're always dealing with one of the alternatives. We're always doing something. Right? Our plan is still in play. Nothing has changed. Right? We still have the upper limit, still have the lower limit, thinking we are going to the lower limit in time. While this time is unfolding, we're building a short position. Right? I'm selling this so that I can make my money sometime in the future. Right? We'll see if the future holds, or we'll see if I'm selling more for longer. Right? This is the trading the facts part, right? We have a plan, but the facts may be very, very different. And we don't want to deny that. We want to trade the reality. And so we allocate that money up front. And we're willing to fix the issue if we believe we're not wrong, we're just being tested, right? So being tested means going into box 2, maybe even box 3, right? That doesn't force you to immediately assume that you're wrong. It forces you to immediately start looking at breaking even instead. Right? It's just that's a reset. If you can get to break even, you may not have been wrong, but at least you'll have had a chance to reset. So we're contained to the current box, this white box right now. We would expect to be contained to that box until the end. And the market will tell us otherwise, if otherwise is prescribed. The issue is in our brain, we have a good plan and it takes longer than we think. And so now we give up on a good plan. We start to change things. We start to interfere with a good plan. We don't give it the probabilities that it requires. We don't give it the time that it requires. We'll know when we're wrong. Stay shorting, whatever you're doing on a day like today. And the Fed speaker that we have scheduled for 2 hours from now may change the outcome of what we have here, right? So this is it, right? We see the calendar ahead of schedule. We know stuff is pushing or pulling on the market. And then we create this environment where we can design the risk. We design that break even, right? We design the outcome. Here we are busting the top of the box. Boom. Okay. Slightly higher high, ever so slightly. 1 pip maybe, a half a pip. And that's the high from the news event. We just made a slightly higher high. Let's see if we can get to the top of the box. And that will allow us to start selling up here. I'm trying to see to my left or over here. This right now would be a good place to take a sell. Right here. Right, so let's draw a couple of lines here. I'm not sure if you guys can see this. Right, it may mean nothing, but I can see this as tightening up. And usually when things tighten, it's like a coiled spring, right? It eventually leads to something. And so here we are tightening up on this particular time frame, 5 minutes. And we're also, I believe, tightening up on our 1 hour time frame, that bigger wedge that we were in, which I deleted. Right, so we have to assume a decision is coming up, right? We will decide in a few minutes what's happening here. And considering where the ceiling is, where the floor is, the overwhelming trend, I already know I don't want to be long, right? So I'll be selling in this area, continuing to book 3 pips, 3 pips, 3 pips, 3 pips. And if anything, leaving behind a little bit of drawdown along the way. Right? The drawdown is willfully spent, right? It's me spending that money seeking a test. I'm testing resistance. I'm testing resistance. I keep testing and testing and testing, and I have the money to do the tests with. Right? Once I find that resistance I'm looking for, I now start to get paid for all this work, right? The issue is finding that level, right? How do you find it? By testing assumptions and testing cheaply, as cheaply as possible, right? 0.01s, 0.02s. Right? You want to go tiny, tiny, tiny and repetitious, right? You want to repeat, repeat, repeat. Again, just so we're all on the same page, right? The daily candle so far has been 3 boxes. It should be 64 pips. It's been 28 pips, right? We have to figure out if this is going to be a tiny, tiny day compared to the average, how is it going to finish? Like, is it sideways? Is this it? Is this a 28 pip day for today? Right. And so if that is a 28 pip day for today, we're just going sideways, right? We're floating sideways. If we're going to reach for the average, are we going to try and reach to the top, or are we going to come back through the range and reach for the bottom? Right? I've built a position in order to reach for the bottom. It's just a matter of time now to see if I'm right, or if I'm wrong, we will break that red line, right? If I'm wrong, in time, we will break that red line and this will never come to fruition. Right. So right now I'm selling the top because of this wedge that I'm creating, this triangle that I'm inside. Right. And I'm selling because of a downtrend. I just don't want to fight the overwhelming feeling that this is rolling over. Right. So this is where a lot of people lose faith, not in this particular strategy, but in strategies in general, right? When you're testing the extremes, when you're feeling the weirdest, it's usually right before the best move, right? They'll make it look bullish. Oh, look, it's making higher highs just before they pull the rug. Right? And likewise, they're going to make it look as bearish as possible just before they shoot it up to the moon. Right? So testing the highs. This is when people feel not so comfortable, right? They assume it's breaking up. Right? A lot of people will be buying up here. Right? Lower high, equal high, and so far, lower high. The timing, the limits are already defined, right? So we know where we're wrong. Our stop losses has not been touched. Uh, by definition, we also know where we're right. We've been trading that probability all morning. And so now time is the last variable. And in time, as time progresses, we're approaching certain known event, right? Like the banks closing and stuff like that. And so with that scheduling comes volatility. We just don't know where on the chart we will be, which price we will be when the volatility shows up on schedule. Right? So the issue is not the timing, so to speak. The issue is, can you afford between now and then? And that's what we're doing here, right? We're spreading that risk between now and the banker's close, right? Here's that UK fix we would be expecting, right? It came in right at 9 o'clock. Boom, boom, boom. Look at these big bars right here compared to the smaller bars before. Right? There's that UK fix right on schedule. It did not last very long. We started to go sideways again. Right? But we'll see. The problem is we run out of money before we actually must. You know, we put too much money too early, or we don't put enough, and the market kind of gives you less than average opportunities, right? So it's this balance. You have to find what you're comfortable with, start on schedule, shoot for average. Don't try beat the average, you know. Look up and see, oh, you've beat the average, but don't beat don't make it a goal every day, right? To beat your own personal average. Just do the best you can with what you have. There we go. That's what we want to see. Right? It's all in the timing. And the issue we have is the timing usually doesn't align with our expectations, right? We don't give it the time it needs. We want it all now, or better yet, we want it all yesterday. The market is more than willing to give it to you at its own pace. So 850, this area here, this 850 we were targeting yesterday, it offered us that support. It came to what, 860 or so? It offered us the support we were looking for. It bounced up. It bounced all the way into the high in the European session. And since then, we've been selling. Right? We've been sellers since the high. We've been selling resistance, right? Hopefully, you've all been selling resistance. And so this idea of not competing with the overwhelming attitude of the market, it's at some point that big move will come back. Right? This bias, this overwhelming attitude is going to show its head. You don't want to be upside down when that event happens. Right? So it's getting caught with your pants now. It's not nice. There we go. That's what we want. A bit more. What are we at now? 806. 5,500. Bad. Average 3 pips. Awesome. Right. So if it pushes up, you have money to recycle it. Right. Remember, you don't want to buy. You don't want to be pushing your luck. Right. There's still lots of time left to the day. Perfect. It's nice to see it struggle on the way up when we have a bearish bias. You know, if you look at it on a, more precise level, right around here, measured environment. Take a trade if you can. There it is. Boom, boom. I'll take two. I think I took two here. The waiting is the hardest part. Sometimes we're done in 20 minutes. Sometimes we're done in 2 hours. What we don't want to do, preferably, is, hold over the weekend and into the unknown. Right? So you're trying to build a exit. And my exit is right here. And it's well within reach. It's only 7 pips away. The market can do 7 pips in the blink of an eye. I think we've had winning days every day this year. And we've had losses along the way, but every day finished green. And so our equity curve is heading in the right direction. Our psychology is not getting rattled. We are expecting problems along the way. We engineer for this stuff as we see fit, right? So it's this switching from plan A to plan B, and the ability to have an alternative solution at all times is what keeps us moving forward, right? We get back on the horse. We have a reason to get back on the horse, right? 3 pips, 3 pips, 3 pips, 3 pips. The swing trades that you see me do once in a while are supplementing what the process is trying to achieve, right? Cash flow. And so swing trade is not a means of generating cash flow. It's just popping up. I'm still looking for my move lower, right? According to my circadian rhythm, not mine personally, but the one that I've highlighted for the euro, I would expect to move lower right around this time, right? 8:30, we got the pullback. We built our position. We got the UK fix. It did not lead to new highs. It barely tested the previous high. And so now we're building towards the banker's close. And that's happening on schedule, right? The banks in Europe will close on time. And with that closure comes expected volatility. And it could lead us to the moon, or it could lead us to the target. Who knows? It could lead us nowhere. Right? All we know is it's on schedule. We just don't know how much work they have to do. So now we're just looking to recycle some of these box 2 trades, box 3 trades. Deep breath. That sound makes me feel like a ninja. Love it. Then we recycle. One. I'm selling that big wick right there. Two. There we go. See if we can break this right here. That would be a good sign. Another 30 minutes or so, and I'll have to let you guys go. But we have a plan of action. We know what to do, we know what not to do, and we also know how to behave. All right, so it's just time now. We have to let it play out. You know, we did the work, we did the dirty deed. Now we have to get paid for it. It's a matter of time. And like I mentioned earlier, sometimes it's 9, 10 hours, sometimes it's minutes. Right? Going down to our 5-minute chart, just to go check out that ladder that we built earlier. You see how things are behaving here. Right? We maintain this. We're targeting this. And so far, we're well within our defined environment. Right? We have not gone on, we have not added anything to the top. We have not added anything to the bottom. We're still inside of a 3-box day. And we're still sitting here waiting. Right? Although we've built the position to take advantage of one outcome in particular, we're ready for plan B. Right? And that's what keeps us winning each and every day. I try to not create a problem. If I do, I reach into my tool bag and I fix it. If I can't, I book a loss, and I try to do that immediately. Right, sooner the better. The fix is the skill, and over time, I use that skill less and less. Right, I make fewer and fewer and fewer mistakes, but the skill is always the same. The toolbox is always the same. I'm I'm hoping to not having to use the tools. Right, so we measured this environment. This has moved 3 boxes all day. Right, it's gone nowhere. 3 boxes all day, 24 hours. Right, let's see what happens next. If you can, if you want to, sell right there. Come on. The waiting is killing me. Perfect. That's what we want to see, right? We want to see it inside the box, and we want to go sideways, right? We are range traders, right? We want to be in this box, preferably heading in one direction versus the other. And as long as we are in the box, our probabilities are valid. When we start to break into the other box, we're now reassessing things, right? And at some point, that reassessment proves itself to be wrong. Like it's the proof is in the pudding, and now you're dealing with the facts. You have to maybe do something about it, right? So that's kind of what we're trying to figure out, right? We're using the boxes to tell us what to do, when to do it, and because you've already defined how much to do it with. Right? So you're not leaving a lot to chance anymore. You're not leaving anything to chance except for your own behavior. Like, how do you behave when you're stressed out? How do you behave when you're winning? Optimally, you're stoic. You just you don't care. Like you care, but it doesn't affect you. The the timing is for me an integral part of this system. The bankers close, the UK fix, all of these events allow me to look forward to the next event because I know it's coming. And so I'm usually expecting an outcome or some kind of a, you know, tit for tat. And that's what we deal with, right? We deal with the environment wherever we are based on what we would expect to see. Right here, right now, I'm just recycling what I did minutes ago. Maybe it is going higher and I'll be taking more trades. I'm postponing gratification. Bottom of the hour. Stock exchange has been open for 2 hours. And here we are on our 5 minutes threatening this. Right. If you have a click to spend near the top there, would be nice. Right. We're just sitting and waiting as we complete the test near the high, right? All of that resistance on our left. This old zone right here, this zone right here, this zone right here, all of that rejection, rejection, rejection. I'm thinking all of this stuff is going to provide a lot of resistance for the euro to go through. And as such, I'm building a position to see the euro fall from here, right? It's a matter of testing all of this assumption, right? As we keep pushing and pushing and pushing into here, I'm testing these assumptions and I'm spreading my risk accordingly. Ultimately, I'm still looking for a move down. I just don't know where that move will start from. And that's what our job is to try and figure out. Right? We know the day is shy. We know the day is missing pips. And that's another, I don't know, it's another clue that we're trying to fulfill. We're trying to use to our advantage. You know, where are the missing pips? Which way will they be coming? Right? They may be coming at the top. Who the hell knows? Right? That's a lower probability considering where we're coming from, but we'll see. Another 25 minutes or so. I'll have to let you guys go. See. This is the stressful part, right? When it's pushing the extremes and it's taking its time doing it, like it's revisiting the same levels 3, 4 times before making a decision. A lot of that is it's stress in the making. Like we have to take it with a pinch of salt. You don't want to, put too much faith in these breakouts. On average, breaks are fake. They're not real. They're short lasting. Right? Remember, we started trading after the news event. That was the breakout right there. We did not play the long side, right? We traded the short side. And we're still trading the short side now, right? Because the upside is limited versus the unlimited downside, right? And even that with time will be limited, right? Right now, it just looks like, ooh, we can go to the South Pole. We have to see how this behaves first. In some of my other account, well, two of my other accounts, I have swing trades at this level here. 85, 88, 90. I'm selling for much lower, 150 pips lower. I want to see it bouncing from there before I let you guys go for the day. So the intent with all of this day's work is we've been selling since the news event, right? We've been selling this so that we can profit by day's end on the way here. All right, so that's kind of what we've done over the last hour and a half. The intent might come to fruition, hopefully before day's end. Let's see how this plays out. It's a matter of time now, right? We spent the money that I have to spend. The only more money that I can spend is if I go into box number 4, right? So for all intensive purposes, I'm tapped out. Right? I have to recycle some of these trades to open more. And now we wait. All right. The banks close in about 25 minutes. And with the close of the banks, we typically would experience a little bit of volatility. And that tends to provide us the exit we're looking for. those of you that have profited during the week, you know, that have had successes during the week, make sure you post in the testimonial forum. And same thing, if you're having difficulties, you know, let people know we can help you. Know what to do. We just have to wait and see it play out. It's a 3-box day today. Since the beginning of the year, I think that's the first time we've seen this. There's lots we haven't seen. This right here, right now, a lot of people are freaking out, right? Because it's pushing up. They have to get in. They have to get in. That fear of missing out, right? And we're looking to our left. We can see, oh, double top, double top. It may not be a double top if it is breaking out, right? So it's takes two to tango, right? There's one person sees something, somebody else sees something else. We kind of use more information than most, but it's a system, right? We gather this information through a process, not at random. And it's always the same thing. It starts on the daily and it leads you to clicking one particular bias versus the other, right? It doesn't tell you to play ping pong, right? Your top-down analysis tells you to play ping or pong, right? And that's kind of the idea, right? Uh, we want to be selective, not, you know, we don't want to be pushed around. Awesome. That's what we want, right? Rejection on that green candle right here. Right, that wick at the top there. That's what we're all about, right? This on a 5-minute, sorry, 1-hour chart. This is that wick that we have exploited, right? We built a short into this. And so now we're waiting to see if we can turn that into red. All that rejection at the bottom, wick, all of this, I would expect or anticipate to see it broken. I would expect this to give way much sooner than later. Waiting's the hardest part, right? This is when I know my brain goes nuts. Right? If my plan's not unfolding the way I thought it should be, and if I did not have plan B already figured out, my brain would be running wild right now. Like I'd be looking for a god to pray to, right? But because we have these alternatives, we have these, you know, other means of fixing things. It's not all about being wrong. It's about, you know, solutioning some stuff. And as far as looking for a solution, you know, it calls for uh, multiple trials, multiple attempts, multiple tests. right? We know we won't be right. And so we might as well figure things ahead of time. Right? This is all situational. Like, how do you feel in this situation? Trying to delete the line and I end up moving everything. All right, 15 minutes. Come on. I want to see it pushing off the high. There, just like that. What time is it? 9:42. A few more minutes. For those of you that are in the room, if I'm scheduled to meet with you next Monday, I will not be here. Right, so next Monday is the 22nd. I have to go to the city. I have to go and meet with my hematologist and my oncologist, and it's a year beginning meeting. So yeah, on the 22nd, I'll be away. If I'm scheduled to meet with you, please reschedule. Okay, and so there won't be a recording, there won't be a live session, there'll be nothing on the 22nd. And I'll be back the following day. It's a whole day adventure to go to the city from where I live. Right, there we are. And so looking left over here, we have this zone right there. We've been hanging around this level for hours. We really have to breach this in order to expect more. And until we can breach this, it's probable that we go down instead, right? The overwhelming bias is in play here, right? The overwhelming bias, right? So we don't want to fight that, especially on a Friday. No, I refuse to short the USD today. Okay, so here we are pushing away from the high. I'm going to shut her down right here. And I'll post a picture of the outcome at the beginning of the video. Okay. Oh, someone's asking if I've seen polar bears. I've seen polar bears, but not in town. Uh, no. Our black bears, grizzlies, and stuff, they're all hibernating right now. Polar bears are further north than where I am, although it's been feeling like the North Pole. No, they're not. They're not here. All right, I'll talk to you guys tomorrow. Sorry, next Tuesday. All right, same time, same everything. I'll see you then, and until then, you'll see this video posted by the weekend. All right, enjoy yourselves. Trade safe, everybody. Bye-bye.